Let's figure out what all this means for the markets and for the economy in the new year. Mohamed El-Erian joins us, Allianz's chief economic advisor. I mean, do you see a scenario, Mohamed, where we have even higher unemployment and higher growth at the same time? What does that look like?
I worry about that a great deal. And as you both discussed, it has political, social, and economic implications. Look, the decoupling of GDP growth from employment has been happening for a while, but it is accelerating. And it's accelerating because of innovation. And the way to deal with it is to have an AI adoption policy. You know, Sarah, David, you and we all talk about those working on AI. It's so exciting. What are the latest innovations? But as important is the issue of working with AI. And as yet, we do not have an adoption policy. And that's going to be really important to determine the mindsets of companies as they move forward.
So what does that mean for, I mean, let's just start with the Fed, for instance, because I noted it was mentioned in the minutes that it would be hard for them to tell whether it's a structural or cyclical change in jobs.
Yeah, and as you point out, this is complicating the Fed's task for two reasons. One, it forces them, which they haven't done yet, to take a strategic view. They're going to have to decide, is this a fundamentally productivity-enhancing innovation or not? That's really important. I think it is. And if it is, then the speed limit for the economy goes up. They can bring rates down. The second issue is, what do you do when the two parts of your dual mandate starts decoupling even more? And that's what's going to happen moving forward. So it does complicate the Fed both from a short-term perspective, but critically, they've got to take a strategic view of what this means for the economy going forward.
So maybe they'll do that, maybe they won't. What do you expect in terms of Fed policy? Since the market's now, at 2 cuts next year, the dot plot's at 1 cut. We don't know exactly who's going to be on the committee. There's a lot of question marks.
So a lot will depend on the new Fed chair, not in the sense of they can completely get what they want, but whether they can unify what is a deeply divided Fed committee. We saw very clearly from the minutes yesterday that the disagreements are deepening. There's more issues they disagree on, and they disagree to a greater extent on them. So it is going to be a very divided Fed. The new chair will have to assert their authority. And the best way to assert this authority is the way Yellen did it, Bernanke did it, Greenspan, is through economic expertise. That's the way you assert your authority on a divided Fed. Otherwise, it will be a very muddled middle sort of monetary policy.